Ladies and gents, welcome back to a new video. So before I get into things, if you like any of the content that you're about to see, please do this channel a massive favor and drop me a like and subscribe. We're getting close to 2,000 subscribers now, so it would really help the channel out. Anyways, without further ado, what I'm going to be talking about is the weekly profile and daily profile and some of the classic buy and sell models that I look for in the markets that can frame really high reward trades. So let's get into things. What you see on the screen currently is just some standard price action. Now, what I like to do, this is on hourly time frame. What I like to do is I like to separate my charts in a specific ways using period separators, and those period separators look like so. These are called the FXN week and day separators, and you can sort of modify so the times change a little bit. What I've got here is just midnight UK and then 5 o'clock in the morning, and that's gonna help me delineate my Asian session. That's what I personally use for Asian session. So those are the dividers, and this allows me to see the profiles slightly better. This red line here is obviously going to be the end of the week. So you can see here Friday, and then we've got this gray line, which is going to be the start of the week, Monday. Right, let's move on. So one of the main things that I look for is going to be the classic buy and sell models. So right here we have a line chart. Okay, as you can see, price opens up, moves up, shifts down, and then shifts down. Now, what we want to do as traders is we want to be able to catch the move from up here, from its highest point, and be able to catch this entire range to the downside and get out some growth. And the way that we can do that is by drawing some analysis on the chart. So this is basic understanding of liquidity principles. Okay, so what we have here is we have some equal highs. So you can see before we had the equal highs there. We have a shift up, which is going to be running this liquidity, and then we have a return to where we shifted up. We have a movement down. Then we have this here, which looks almost like a retest of the bottom of here, and which would be a breaker. And then we have an entry there, and we continue to the downside. Now, let's have a look at it in terms of what happens on the specific days. Now, what to expect. So I tend to recommend sitting out of Monday's trading, because often what happens is Monday just builds liquidity. So as you can see here, this day, which is Monday, there you go, this day, which is Monday, is going to build liquidity, and then Tuesday is going to run that liquidity. We potentially might get an entry on the Tuesday to the downside, or an entry on the Wednesday. Now, occasionally what can happen is on the Monday and the Tuesday, liquidity can be created. So just imagine this being shifted over a little bit further to the right. Then the Wednesday runs that liquidity and then pushes down. It gives you that entry, that high of the week, to then run down for the rest of the weekly range. Okay, so let's have a look on an actual chart. So we've got CAD JPY here as an example. This is also on the 1 hour. As you can see, coming into the week, this is the week start, and then this is the week end. So we've got a push up, then we create some liquidity, some very obvious equal highs. As you can see, price then pushes up. We then get a break to the downside. We have a structural shift at this point, and then we get our entry here to the downside, and you would be able to catch all of this weekly range there. Now, there you are. So what I mentioned was look for the Monday and the Tuesday. In this situation here, the Tuesday has created the obvious liquidity. So that means the high of the week is likely to form on the Wednesday when you get a push above this liquidity. Okay, this could also happen on the Monday, and this push up could happen on the Tuesday. You've just got to look out for when the obvious liquidity is being printed. Okay, so moving back to this profile, this is absolutely key, and this is something that you'll be able to see literally wherever, right? Before I move on to that next bit, let me show you some actual examples. So I'll show you euro dollar. Euro dollar is a great example. This is this week's price action. So as you can see, we've got a downtrending market right here. And obviously we're going to be looking for sells ideally, but that's not what presents itself. So instead of marrying a bias, we're going to look at what actually happens. So as you can see, we've got some liquidity to the downside here. We've got low, another low, and then we've got this obvious low that was created down here. Now, if we look on the higher time frame as well, what we'd want is a bit of confluence. So let's have a look on the monthly, and let's move this out of the way. Cool. So on the monthly time frame, what has happened recently, we can see all this price movement up, and then we can see current price moving back down towards fair value. We have got this low, which is what price looks to have taken out. So we'll go back onto the 1 hour time frame. You can see there we've taken that out, and then we've got a quick sharp movement up. We've then created some liquidity to the downside, being this obvious low where a lot of people are probably going to be long at that point, and we're also engineering liquidity to the upside. So we've got an upside target, we just wait for the run to the downside, and that happens on the Wednesday. So we've got Monday, Tuesday, Wednesday. Liquidity gets built up. Perfect. If you want to look onto the lower time frame here, you can actually see more obvious liquidity being built up, like so. There you are, more obvious liquidity being built up. Cool. Then you get your entry, and that happens around London session or potentially re-entry in the New York session. So let's say we use this, we get a nice displacement to the upside, and we use that order block. Perfect. We cover the low, and then we look to capture the entirety of the weekly range, which ends up being about 1 to 10. Perfect. Obviously, looking to take partials at key zones, like the running of this liquidity here. Right, so that's perfect. Now let's talk about the rest of that profile. So we obviously have our Tuesday/Wednesday high of the week. Then we have a potential re-entry opportunity. This can happen Wednesday or Thursday. And then on the Friday, we tend to create the low of the week once again and have some form of retracement to the upside. So if we look back at this chart, we've got, there you go, Monday, create liquidity. Tuesday, we're also creating some more liquidity to the upside. Then Wednesday, we create the low of the week. We get that push up. This is Thursday, where we are creating our re-entry. So let's have a look at reasons for re-entry. Maybe on the higher time frame, it looks a little bit better. We've got fair value gap here. Probably could confluence it with something else, but anyway, you get a lower time frame entry, as you can see here. And then you capture the rest of the weekly range. Now, what happens on the Friday is you start to get that retracement. You get a run on liquidity here, and you start to get that retracement. Not a big retracement, but still a notable retracement. So I would be looking for reasons to get out of a trade on the Thursday or the Friday morning. That's me personally. So there's the weekly profile. That's the weekly pip cycle, and that's classic buy week. Okay. Now just imagine the opposite for a sell week, right? Also, let's look at GBP USD. Let's see what's happened here. So this is actually probably a cleaner example. So what we have here, let's look on the monthly time frame. So this is quite key. We've run all-time low there. Perfect. Now dropping onto the 1 hour time frame, you can see we've started on Monday and then on Tuesday. Now both Monday and Tuesday we look to be creating some obvious liquidity, and this is the pair that I would probably choose to trade over Euro USD, because this is a lot cleaner. You can see we have this liquidity that's created on the Monday and the Tuesday. What happens on the Wednesday? The Wednesday runs the liquidity. Coincidentally, that runs into an order block. So this down candle before this up move, which has created some displacement in price. Price returns back to that order block. It goes literally back to the open, to the T, and then you could look for some form of entry within there. What happens? You then capture the entirety of the weekly range, push up, re-entry on Thursday, push up again, and then retracement on the Friday. So that is probably the best example that I can show you, right? And this is literally just happened this week. So, you know, what I'm saying isn't just cherry picking. It happens week on week. Now, moving on to the slightly lower resolution timeframes, what you can have is that same profile that has happened on the weekly time frame, so on a weekly range basis, you can have that happen as part of the daily range and the daily pip cycle. So if we just drop in, and this is going to be the classic buy day and the classic sell day. So what we have here is, instead of looking at Monday creating the liquidity, we can look at the Asian session creating liquidity. So the Tuesday, we've got Wednesday, we've got London session, which runs that liquidity. Then Thursday, which will act as New York. And then towards the end of the day, where you get that retracement. So it's very similar, exactly the same. And what you're looking for is the same thing that I showed you for the weekly time frame, just on the lower time frame. And this is the open of the day and the close of the day. Perfect. That's what we're looking for. Now, you can also look for that run into a higher time frame point of interest. So that can be a run of highs. It could be an order block, could be a breaker block, could be an imbalance, fair value gap, what have you. And then ideally, you want to have some form of higher time frame target so that you could look to get out of the trade. Okay. And you would look to go about trading this pattern like so. Now, as you can see here, we've got the Asian session where we consolidate a little bit. There's obviously some liquidity just before that as well. What happens in London? Price runs up. There's a bit of a structure shift to the downside. This is on the 5 minutes, so you could look to take 1 minute entries, etc. But then you basically return back to an order block and you get pushed down in New York. There is some form of re-entry there. Now, not something I'd personally look to take, but this is just an example. Okay. Now we have the reason behind why this works. So you've got the consolidation there. You've got this higher time frame point of interest, which is an obvious high. You then get an instant rejection after that liquidity run, which shows willingness to move to the downside. And then you have that re-entry there. Cool. That was the higher time frame point of interest from another example, which was the previous example from the previous week. But this example here for the daily profile perspective for the classic sell day, we've obviously got that obvious high liquidity being created in the Asian session, then this run up here. So that is what I tend to look for a daily profile and a weekly profile. Now, sometimes, like I say, these sort of things can happen a little bit later. So instead of London pushing above that liquidity, sometimes that can happen in New York. You've just got to be vigilant and look for what happens. But we use this day as an example. Let's see what happens here. Cool. So, right, we have this being the Asian session here. We've got some liquidity in the Asian session, so that's actually quite nice. This end up going to be, well, this is going to be a really good example here. So we've got the Asian session. I will make that a nice big gray box. You've got these equal lows here. You can see that those equal lows get taken out by what? London session. Perfect. And then you get a structural shift to the upside. So I would personally choose this point for a structural shift. Then let's look at where this displacement's happened from. So it comes from down here. Then I would look to potentially take an entry there. You could just put a limit order covering the lows, or you could look for a confirmation. Now, as far as taking profit, I would look to take this high here. That's a higher time frame high. Nice obvious one. There you go. A nice hourly high, probably even 4 hourly high. There you go. And that's going to be a key point for me. Also, there is some liquidity being created there, so that's where I'd look to take at least some partials off. You can let the rest run for a higher time frame target. Now, this is where you can sort of blend things. So on this particular day, we're just going to ignore this big spike, but let's just say that instead of happening in London session, it happened a little bit later. This is now the New York session. So we created the liquidity there. Then it runs it in the New York session. Then you get the structural shifts to the upside. So that there, structural shift. And then you get your entry in there. So it's happened slightly later in New York. And then you can look to run that to higher time frame targets like so. So that is how I'd personally look at going about taking trades from the daily and the weekly profile. Now, if you blend the two together, so you blend having the weekly profile, so looking at it on the hourly time frame, and then using the daily profile, you can actually get really high risk to reward trades with high probability as well. So that's something that I would look to take. And yeah, I think that is the majority of what I needed to tell you guys. Going forward, if you want to see more of this sort of stuff, drop me a comment and drop me a like. The videos that get more likes, I tend to do more of that sort of stuff. So let me know, and I will catch you all in the next video. Peace.